Good morning, ladies and gentlemen. I would like to thank Dr. M.K. Balogu. I know he's not here. I think he's the Chief Executive of Global. And I got to meet him last December when he had a sort of seminar and training at his office. And for years, he had been in touch with my affiliate office in Johannesburg, but we had never really quite met. We've been meeting on emails. But that December when we met, he felt I needed to greet, those at the forum and say a few words. Looking back, I think I probably talked myself into trouble because he said, "You're definitely going to come back." I did not imagine I'll be speaking to a bigger forum. That notwithstanding, he felt some of the experience I had had was worth sharing. And as the lady had said in the introduction, my association with DTZ, CUSHMAN and Wakefield goes back to about 10 years ago when DTZ Leadenhall was representing DTZ International in Sub-Saharan Africa. DTZ International is on the London Stock Exchange, is over 300 years old, and in 2011, it merged with UGL, bringing in the Pacific area into its scope of operations. And then in 2015-16, it merged with CUSHMAN and Wakefield. CUSHMAN and Wakefield is dominant in the North Africa region. It had been a Rockefeller-owned real estate group, and in time, it's become a global player. In that period, since 2006, we have acted as a representative office, trying to bring local experience to blend with international expertise, especially when we returned to democratic rule. A lot of businesses were coming back into. We were beginning to see foreign interest come back to Nigeria, and at the back of that was also their interest in both real estate for purposes of offices, for different other purposes. And you can imagine how it will be if someone is sitting in New York and trying to understand the property you are trying to acquire for him for use here. So it challenged us in trying to actually begin to classify what we do, begin to bring it in line with international best practices. So that's just the background. Earlier, I was fortunate to have joined Churchgate when privatization came. I was lucky to have met Arthur Anderson then, and together with them, I was doing a lot of due diligence for entities that were being acquired, and it just spun off to when private banks came. And so the corporate and the business aspects, sort of came in, and I had that sort of role cut out for me. It was difficult to go back again to be just a typical legal advisor, but one that had to stick, with real estate. So that explains the DTZ, CUSHMAN and Wakefield information there. The merger was consummated last year. After a period of 18 months, we probably will drop the name of DTZ, and then we'll stick with CUSHMAN and Wakefield. The Leadenhall aspect is out. Now, I want to thank Global. I want to thank the Lagos Business School. I want to thank this forum, being the alumni of that school. One of the things we expect that through business schools we can do is frame agenda, begin conversations, begin to challenge the environment where we play. And in the context of AMCON, as we go along, I hope I'll be able to convey the things that agitated my mind, about that. But essentially, at the background of our minds, let's look at the fact that we're going to begin to shape the conversation. Now, with respect to real estate itself, I know I am speaking to very experienced people who have already been in the business. I know there are chief executives. I'm just going to mention some obvious facts which we know. I've taken a definition there to be that it's a property comprised of land and the buildings on it, as well as natural resources of the land, including the uncultivated flora and fauna, the farmed crops, livestock, water, and minerals. if I could just make some comments there. We find that typically when you start a project here, one of the first things you probably see is that the site is cleared. You disturb a lot of things. We had calls in 2016 to value a project for a major foreign government, and the question was livability. Can we live there? How much has been disturbed there? What issues are we going to face, considering that where we are in Lagos, humidity is high? Do we need to put dehumidifiers? Is it going to impact on our energy costs? You know, would persons who have certain health challenges be comfortable to live there? If we made this investment as prime as that asset is, when can it be fully livable? When will we have a community? And some of those questions, regrettably, we could not answer, you know, in the affirmative, because we just were not too sure whether that particular environment. I think also we know that there's some conversation going on now. If you need permission to do a borehole, and that affects the fact that the water on your land, or the mineral there, you need to be certain whether it does actually belong to the asset or it doesn't. So that's why I've taken that definition. As we do our developments, we need to be mindful that as we keep engaging the rest of the world, they're going to be looking at, you know, more broadly definition of the property and the assets that we are developing. Now, we all know it could be residential, it could be commercial, it could be industrial. And we all know why we do them, because as population is growing, our attachment to land, you know, begins to be more tenuous, because more people, more pressure is going to be put on land. In a state like Lagos, which is an island state, I don't know how much of the traditional stock would have remained if we haven't had reclamations. And so it means that as time goes on, the competition and the need to have attachment to land, you know, would increase. I've made some examples just to show how important it can be. When we lost the Bakassi Peninsula, I had the privilege of being a guest of a Supreme Court justice who, in an arbitration in London, had been advised on what was going on Bakassi. And apparently, there was not much that, you know, we were paying attention to on why we had to, eventually we lost Bakassi. And other examples are there, the Falklands Islands. If you know where UK is, you know where Falklands in Argentina is. How could UK stage a claim, prosecute a war to maintain interest there? It's all about what is in land. And then I think the most controversial is the 6,220 square kilometers of land, which is the core of the Palestinian question. It's challenged the world for over 50 years, and it's still not resolved. So that's how valuable land is. By experience, we all know it's a store of value. We can use it as a collateral. It's a source of rental income. There's capital growth element in it, and then, of course, if you do sell off, there's premium return when everything goes right. Certain things can challenge some of these expectations, and that's where the likelihood of interface without AMCON could affect that. Now, under our law, because of how important, you know, the right or interest in property is, the Constitution protects it. It's part of the fundamental human rights that are recognized. Section 43 of that 1999 Constitution is very clear. You know, there are exceptions also in Section 44. Sub 2, which is actually what AMCON has also largely relied on for its inroad into real estate assets. And so you'll find also that there's the land use decree. I feel very sad that we've not really taken the land use decree out for full conversation, because if you look at the opening sections of the Land Use Act, it's a public trust. It says that the governor holds it in trust for the entire people of whether it's a state or whether it's a federal minister. So it's a statutory trust. And trusts have certain rules that govern them. And one of the things that, if you place the Land Use Act as a statutory trust side by side with the Constitution, then the provision against discrimination comes up. that if we are all beneficiaries under the Land Use Act as beneficiaries of a statutory trust, as you administer land, some measure of equality needs to be there. We know that often that's not the case because the exceptions are used, and those exceptions include when there's overriding public interest, when insolvency issues threaten that interest, when for sequestration reasons, let's assume Nigeria has a dispute with another country and the national of that country is here and we don't quite trust him. Sequestration can enable us to put certain assets where they operate, under some sort of restrictions, and then we have judgments and court orders, which can affect it. Now, I'll leave that slide by just raising the issue. When the real estate interest is work in progress, what does happen? Because when I go to the next slide, which has the outset of AMCON on, many real estate interests that went to AMCON were work in progress. Now, told from the accounting point of view that when a real estate investment or project or development is work in progress, from the banker's point of view, it's really not a performing asset. Whereas from the developer's point of view, as far as your balance sheet is concerned, value is being added and it's increasing. So you find that your perspective and that of the banker, at whose back you should always see AMCON from day one, are different. Because from the point of view of the banker, how soon are you able to exhaust whatever facilities you've been given in terms of servicing and paying off, and in terms of AMCON ultimately, how long can they hold this? So that's the background until AMCON came in 2010. We were lucky we didn't have the meltdown when the rest of the world had it. It originated in the US, which we all know. And then we had ours late 2009, and then in 2010, the AMCON Act came. What is instructive is that it came barely 4 or 5 years after we had recapitalization of the banks. So what really happened? Was it that the recapitalization exercise was not really so homegrown, or was not so deep, or was it that the supervision of the banks and what the banks could do were such that barely 4 or 5 years again, we had a scenario where the banking sector was threatened. We had the failed banks and recovery of properties scenario where we had tribunals that actually in the Abacha era could, get someone detained, take over your assets, sell it off. It didn't need to go through the regular courts. The tribunal provided a very expedient and fast means of resolving those issues. In the AMCON scenario, it's a different thing. So we look at our own AMCON objectives. They were basically to take over non-performing loans, to take over the eligible bank assets that had been used by parties that were funded by the banks, and then to free up the capital of the banks which were being impaired by these bad loans, and then ultimately to enable the banks be able to do the traditional thing again. Now, the distinction I would love to make between our own bailout approach and the US bailout approach is that in terms of background, the US bailout was largely triggered by failure in mortgage-related securities, when over-leveraging and all the derivatives that were being created out of them, the matter came to a head and it just couldn't work anymore. Now, in their own case, the act which was passed was a clear appropriation. It had a figure, it had a number. A separate institution was not created, but the Treasury Secretary had the role of intervening as they saw fit within the framework of that appropriation. And the approaches they took, we will see, were quite different from ours. In our own case, we set up a corporation. It was capitalized to the tune of 10 billion. It's owned partly by Central Bank and Federal Ministry of Finance Incorporated. The funds that AMCON eventually used were more or less created leaning on the sovereign guarantee of the federal government acting through the CBN. And so it's been able to sort of create the coupons or instruments which they gave banks in exchange for these assets that they took over from banks. But then we find that there's no clear way where you draw the line how much must go in there, how long must this exercise last, and how do you ensure that what we've tried to do does not reoccur again. So these are some of the differences. And again, we really didn't have a mortgage scenario like we have in the US or we had in the US, as we're purely that several economic activities, had resulted in the banks being threatened. When we get to the slide where we see the sedimentation of what AMCON did, it will become clear where the largest chunk came from, which was the oil and gas, and then the shares and a couple of other sectors. I like to hint that if your real estate project is work in progress and AMCON comes in and there is that intervention, clearly, very, very, very the Ahmed Tinubu International Truck Terminal Legomu came out of a social problem. Nupeng tanker drivers were parking on flyovers. We were all alarmed, and a conversation began, should they be somewhere? And land was acquired in Legomu. It was a BOT. So for that developer, your term was very clear that for a number of years, you're supposed to develop this specialized asset. You're supposed to bring the culture of tanker drivers using it. Other things happened. Land was acquired at the back of it from the Ojora family to develop where drivers could stay, because there was the risk if drivers stayed with their tankers overnight, the health hazards and other issues. So it was quite clearly conceived, and funding came. An issue that one learns from there is an issue that is still with us. We will talk about that at the end. Right funding for right project. For so long as we continue to use short-term commercial funds for long-term real estate development, we are going to continue to have these risks and this stress. And when we come to the end, when we begin to talk of where should AMCON go, what can happen, I think we need to begin that conversation. So that terminal, only the first phase had been done. The second phase wasn't done when the challenge came and the Intercontinental Bank, went down. It was performing, but the fact that Intercontinental had other problems, of course, they could not continue to carry this if, as an entity itself, the bank was threatened. It takes every other thing that it was doing along with it. Today, the developer has worked out some level of repayment with AMCON, but what has happened is that developing and completing the project ceases to be the core objective. And if, as a real estate investment, if you keep in mind those benefits we talked about, why we do real estate, it means that those end expectations clearly have been compromised. And you're actually just working, either to keep servicing the loan. If you're not unlucky, the term of interest in the BOT runs out. The asset may be going back to the state government, and it's probably not a fully developed asset. Quite clearly, the solution it was expected to bring has not been brought, because we now know that several other locations are being used by tanker drivers. If you go through Apapa Oshodi, if you go through the Badagry Express, it's all completely compromised. So that takes me to some of the breakdown. Now let me speak briefly about the AMCON Act itself. I think we will find the most to look at in the Section 5, which spells out the functions, the powers, and what AMCON can do. And it includes taking over some of the toxic assets from the banks. It includes taking over the collaterals that back them. It includes managing them. It includes converting them to liquidity if they decide to sell. It doesn't matter what objective gave rise to that development. From their own perspective, recovery is key. And if you look at the fact that often when you are liquidating a collateral, it's a discount market. It's a forced sale value. They don't look at that balance sheet aspect of it. They're looking at, if I'm going to take it today and somebody is looking at it as a non-performing asset that I will add so much to bring to fruition, it's a discount market. So quite clearly, you'll find that it doesn't seem to help so much if ultimately your project goes to AMCON. keeping you in your business, helping you realize your development is not really AMCON's, ultimate objective. The ultimate objective is that thing that laundry does. It's a sort of financial laundry. It's taking very toxic assets, it's supposed to launder and clean them out. And therefore, you still need to worry. If I've got to pay this off and then eventually continue with the project, there are consequential issues that arise. Of course, the cost overruns, the time overruns, and other issues. So in terms of the banks that eventually went to AMCON, I think out of the 25, 24 took advantage to take assets, transactions and the collaterals to AMCON. In terms of the breakdown, we see that oil and gas again accounted for this, and you have general commerce next, you have capital market. I think capital market was one of the most worrisome because a trend was happening, and if that affected the credibility of the stock exchange, government felt very threatened, which is one major reason the AMCON model was used. If you looked at manufacturing, you see how small it is, notwithstanding how much impact that makes to our GDP. And we are still in that position today where we can clearly say we are actually deindustrializing. And now that we are in recession, it's only now that the conversations are coming back, to go back to manufacturing. Finance and insurance, in that you would also find real estate, because some of what was done in the real estate arose out of finance. Now the next slide shows the sectoral distributions. We see there the oil and gas. We see where manufacturing again shows. It's just another way of bringing out the picture of what happened. And you see real estate as a very small 5%. Now, my thinking was that if real estate was so negligible, given the size of the liabilities that AMCON eventually took in, it should be possible to have a conversation that this can be salvaged. If you're talking of salvaging 27%, and it's huge, I think it's easier to talk about how do we salvage the 5% that came from real estate. The next broke them down as to the size of exposures, and what is alarming is to find that 10 billion and above accounts for 40%, and out of that, it was from 62 transactions. Now, when you break the economy down and you look at businesses that are 10 billion and above, in terms of the loans, and if we use the traditional ratio of debt to equity, I doubt how many businesses are genuinely there. But when we saw that 27% came from oil and gas, it does show that a lot of what was happening in oil and gas, given the timing these things happened, a lot of things were out of control. If you look at the tank farms and everything that happened because subsidy was being paid on petroleum products, it was an easy avenue for money. Then we can clearly see what happened. And the danger, if you analyze this further, was that these were largely specialized assets. A tank farm is not something you can send very easily. And because of the urge to get in, catch the boom, so much of that is there. And we need to think of the long-term exit strategies. How will those things be? If the new free trade zone succeeds and some of the new developments there take over importation of this sort of, the services that they render and the assets that need to be there. What the free trade zone will do is that at least the original cost of you acquiring land in Apapa and the environs and elsewhere, under the trade zone arrangement, that could be actually, very much moderated. So it does make sense to say that in time, many of these assets, are going to have difficulty. Now, if you go back to our definition again, I mentioned the environmental considerations in a real estate development. I don't quite know if we are going to have the capacity to remediate the environments where we've had these assets. Are we going to be able to clean up, treat the groundwater, restore these areas to what they are? Are we able to really say how much of this is affecting the rising incidences we are having of cancer? We can't really say. How much exposure to carcinogens have we had? But it does raise the fact that You know, these are the breakdowns of the loans and what went in there. So the next slide, again, is a reflection. And then we have the sort of collaterals that went. We see the combination of assets that were used to borrow. We see those that were strict debentures. What debenture does in its character is that it actually takes the ownership control of that asset out of your hands and puts in the hands of the debenture holder. You know, in mortgages, it may not so strictly do so in the sense that you have equity of redemption when the time is up and if you fulfill your obligations. We had others, we had shares, we had combination of shares, and then alarmingly, we had 22% unsecured. So you can see why the laundry has been so busy. If so much as 22% was unsecured, it's quite clear that AMCON is not going to come out as an entity that may have served the economy well. When we look at, there's something that I brought out that I haven't reflected here. When I looked at the 2015 accounts and financial statements of AMCON, you still have about 5.1 trillion of liabilities. You have personnel costs of about 17 billion. You have about 6 billion of terminal benefits towards their pensions. You have several other figures relating to the consultancies and consultants they are using. And then you still have the issue that some of these banks are now obliged to buy into to invest in the sinking fund which AMCON has raised, because there is a growing concern that if it must be wound up when it's 10, to let the burden of all these losses, our toxic assets, hit the system again, it will be very, very challenging. So the banks are investing in that sinking fund. I think the sinking fund is hoped that it will moderate what will be the residual loss at the end when all the bonds or instruments will eventually be redeemed. Most of them, as we know, are still with central bank because the tranches 1, 2, 3, and 4 were redeemed some couple of years ago. But a lot, you know, is still with the CBN. Now, one of the things I mentioned earlier was that the way we structured AMCON was different, you know, from the US model in the sense that it wasn't an appropriation, so we were not fixed to any volume of what it will do. It's cheering, you know, to know that the World Bank has advised we need to think of how to wind down AMCON. It's cheering to hear that AMCON itself feels it can no longer keep acquiring toxic assets because, again, there are feelers that they are already growing in the banks again, you know, and it therefore raises that issue that should we use this model for solving these sorts of economic, you know, challenges. It's good to hear the MD of AMCON say that, look, if private businesses fail, it's one of the things that can happen. Businesses can fail. You know, in the US, the debate was, should you use Main Street Fund to bail out Broad Street? You know, and frankly, if we looked at all the rights we are all supposed to have as equal citizens, including corporations, one would feel bad that so much has been used to bail out a few businesses. But yes, the good argument that was made was that it was capable of bringing down the house, but could we have done it better? You know, some of those are things I addressed or I tried to raise at the end. So AMCON intervention as a third party, this is the area that as a lawyer has bothered me. When you negotiated your funding, you dealt with a bank or a financial institution. There was no consciousness at the back of your mind that that transaction could end up with AMCON. But that's the reality of today, that if you're discussing with any bank, hardly will you have the opportunity to do your own due diligence on the bank. The bank will do due diligence on you. And the reality is that that bank and that transaction might eventually take you to AMCON. In the case of Intercontinental, where they were performing loans, but because the entity itself faced insolvency, you know, we found that the AMCON entry was intervention. And that does a whole lot of things if your project is in the pipeline. You know the levels of agreements you've had in the course of your project with consultants, with designers, with other financiers, your own equity, with your programs, the timeline, the insurances, everything that you've done. Once AMCON intervenes, coming from the standpoint of a public sector entity, you know that as far as time is concerned, time is at large. Quite clearly, you don't know when you're going to be even able, if you ever come out, to think of completing your project again. So that's something that you need to keep in your mind. And remember that AMCON actually is a third party. You never had an agreement with them. Because of the legal framework that enables AMCON actually to come in, circumvent the consent provisions, not necessarily go through the traditional legal processes. There's an interruption to your development. The other is, as a supervening factor, it takes over every other thing. Every other thing that was on critical part is overtaken. The main issue becomes, you hope you're not in detention. You hope you're able to keep your staff. You may have groomed people who over years were resourceful for you to go forward for your growth. But once that intervention happens, it just takes over every other thing. The other aspect is your project and dynamics and timeline. Again, that goes out. If you were hoping to complete the project at a given time, if it survives at all, again, that time factor can only be considered if you are successful to come out. And if AMCON, for instance, decided that they could partner with you in the sense that it makes all the economic sense to complete the project and then begin to enable you repay out of that, then again, I'm sorry. Okay, so the timeline aspect, can be very critical. A certain hospitality project had designs that were conceived in the late 90s and into the early 20s. And you know that for certain luxury hotels, it's a combination of both the facilities and the design and what you intend to sell. And so when time has passed you by, or when your project is being delivered beyond the time when the market would have received it well, certain projects eventually don't quite do as well, because at the time you completed, the scenario, is completely different. We see certain commercial office buildings that are being completed today. We all know what the rental regime is. If they had been completed when the Niger Delta issue had caused a spike in Lagos, and that made many people jump in 2006, 2007, only to find that the emblems are elsewhere. What should we be taking back to them? If they keep faith with the fact that AMCON shouldn't last more than 10 years, the exit strategies, what should we be discussing? What sort of arrangements should be in place? Can we have partnership with AMCON, or can we structure some sort of insurance where, given the fact that we know that real estate is a long-term development and we don't have long-term funds, what sort of partnership should be there? That's something that we need to think about. That's a message we need to send back. When we look at AMCON itself, I was privileged when the Pioneer MD spoke to the Institute of Directors, and he spoke about their being running on the basis of guaranteed bonds. I asked the question, if you're going to have the pool of assets that are coming to you, shouldn't you do a real estate investment trust? And I remember he was sitting with an advisor from the IFC, and his response was, I'm a pilot, I'm flying the plane, that's the way the plane was built and programmed. He agreed that a real estate investment trust would have opened it up in such a way that, again, the asset is spared, the public are able to buy into it. And if you look at the modification that Barack Obama brought into the US bailout, the fund was approved, the act was passed just before Bush left. When he came in, he looked at how the public or the private sector can join to take up those toxic assets and actually provide the funds that frees up the collaterals. You know, even though in the US case, the banks did not feel very comfortable to let go of those you know, defaulted assets and facilities. The banks were not keen. The preference seemed to be to help the banks recapitalize. And if we all remembered, that's what gave rise to the stress test that was done in US banks. And once that stress test was done, it became obvious that more banks were willing to go and take the bailout. If you're familiar with the book 13 Bankers, you know, that book actually tells the stories that at the end, the banks felt this was very good, easy money, you know, and they actually ate their cake and had it. You know, in our own case, it's not quite clear if we can truly say how much of loanable funds were freed up at the banks, because it's not so clearly monitored how, as between them and the central bank, they discounted the instruments that they got through AMCON. And how much of that, you know, did government in its policy insist will be plugged back into driving the economy? I will dare say that if these aspects were monitored and it was clear that so much of what was freed up from AMCON went into the real economy, I don't think the recession we are seeing today will bite so much. I don't think the challenge of still finding funding will be there. The other issue is the issue of, can it be used to create the right fund that suits real estate? Because we tend to know the housing deficits that we have. We tend to know the challenges of acquiring land that we have. But the deficits are not only in terms of housing. There are quite a number of areas where, you know, the developmental index is so poor. For instance, if you look at healthcare, even hospitality itself doesn't have the spread. You might find so much in Lagos, Abuja, but outside the major metropolis, can you really, you know, find the quality of assets that one could say, you know, fits that industry? Do we have enough to inspire tourism?